Have you guys heard about the latest DeFi game on the block? It's called Chicken Bonds. Alright, guys, we're going to talk about chicken bonds and how they could potentially be creating a massive flywheel for LUSD and Ethereum. In this video, I'll talk to you guys about chicken bonds, some strategies, how to play with chicken bonds, how to use chicken bonds, as well as how they create this flywheel. It's not going to be a super long video, but it'll be a video. So first off, what are these things called chicken bonds? Well, I highly recommend you guys check out this introductory video on chickenbonds.org. I'll leave a link in the description below, but the summary on what these chicken bonds do is they help create protocol loan liquidity for the protocol. So this can be deployed with any project or any team. Right now it's just being tested out with LUSD. In fact, I got this full article on Substack if you guys want to take a look into this. But right now, what chicken bonds are doing to the LUSD token is juicing it. This is a stable coin, and it's literally priced at $1.04. This is mainly due to the demand that chicken bonds are bringing to LUSD and the yields on Curve that people are chasing with LUSD. To open the bonds and use the bonds, we're going to be using DeFi Saver because they have a testnet that you can try and show you how it works. But this is on liquity.app. And as you can see here, the APR for the BLUSD, which is basically the boosted LUSD, this is the token you get for bonding, is currently earning a 50% yield. And the Curve pool is earning 22%. Yes, you heard that right. This is on stable coins. So before getting into that, let's explain what Liquity is. One of the main draws for Liquity has to do with the 0% interest loans as well as the capital efficiency. You are actually able to get a loan at 110% collateral ratio. What this means is that you can borrow $900 or up to $900 on a $1,000 worth of collateral deposit. So if I deposit $1,000 worth of ETH, the most I can borrow is $900. Now, I'm not telling you to go do that. It's extremely risky because if ETH goes down in price, you can get liquidated, but it's something interesting to note. And as you can see, Liquity, when it first hit the stage, it caught a ton of traction. And this was earlier in the bull market. And of course, after a liquidation cascade and a lot of people having to repay loans, stuff happens. And as you can see, the TVL is kind of bottoming out. And also, one other interesting fact about the LUSD stablecoin is that the only collateral it has is Ethereum. So it's actually a truly decentralized stablecoin, and that it doesn't have USDC on its balance sheet or USDT or any of these other centralized stablecoins. So now this is where chicken bonds come into play. Remember, the goal of chicken bonds is creating protocol-owned liquidity. In order to drive interest for people bonding is to drive up the yields. And the BLUSD token is the driver behind this. It actually gains and holds a yield from the people bonding, the reserve, as well as the protocol-owned liquidity. Remember, this protocol-owned liquidity, as more people are bonding in, this goes back to keep paying out dividends. So as that gets larger, the dividend floor constantly rises because there's more protocol-owned liquidity. So this is why it's able to offer a high APR. As you can see here, it's currently about 50%. And this is coming from a mix of different yields. Remember, bonders, the reserve, and protocol and liquidity. The bonders, when they deposit their LUSD stablecoins, you can look at it like sitting in a waiting room, deciding to either take surgery or leave. So what happens in this situation is people put up their collateral up front. If they decide to leave, let's say they put in $1,000 worth of LUSD, they can get all that collateral back. The only thing they lose is the opportunity cost and the interest they would have earned. This goes to the BLUSD holders. Now, the reserve, this is the bucket that is backing the BLUSD. So when people chicken in or go to surgery, this is when they say, here, look, take my LUSD and give me this BLUSD in exchange. Remember, the BLUSD is yield bearing. Now, depending on when they do that, a portion of that goes to protocol-owned liquidity. Now, there is a mathematical approach on the opportunity cost and the maximum derived value you can get when you're bonding. And this is like a little curve chart that you can see. Basically, when you first bond, you're going to be earning nuts and ham on the APR. But as time goes, there is a time decay, so your APR yield starts to slow. So if you first deposit it the first few seconds, let's say they're 1,000, 2,000% APY. Well, over time, let's say a day, 2 days, 3 days, 4 days later, that yield is going to be significantly less. I'll show you guys some examples so you guys can understand, and it will make a little more sense. So let's go ahead and create a bond with some LUSD. I'm going to go ahead and lend out some ETH and borrow some LUSD against it. I'm just going to say, hey, look, I want to borrow 10,000 LUSD and see what happens. So I'm going to create this trove and approve the transaction. So I now have $10,000 worth of LUSD. Guys, this is real fake money. So be careful. So let's go ahead and take our newly found LUSD and create some bonds. It's probably best to create like 3 or 4, especially if you're dealing with a lot of money. That way you can be a little more flexible with your strategies. I'll explain it later in this video, but just remember, having separate ones offers more flexibility. So we're just going to do 5,000 of our LUSD and we're going to create this bond. As you can see here, our estimated break-even time is December 4th. So that means about a month from now, we will basically get our original deposit, and anything more than that, which is additional time, because it's going to be still accruing a yield, it's gravy. So this is going based on the BLUSD pricing at this time. So if BLUSD right now is only $1.10, then that means, okay, well, if it stays at $1.10, I'm going to have to wait in order to break even till December 4th. However, if this BLUSD price goes to $1.40 or $1.50, it's actually going to be a win-win, and I'm going to be able to break even sooner. Let me show you what this looks like on the Liquity app. They have like a little toggle you guys can see if you simulate the market. So if it's at $1.20 and I'm doing 5,000, my break-even point is going to be December 4th. Well, let's say LUSD just skyrockets to $1.54. That means my break-even time is going to be November 15th, not December 4th. But there's a chance that it goes to $1.04, which is not cool. So at that point, I got to wait till March 12th, 2025. That's a long time. At that point, I'm just like, dude, what the snap? I want my money back. I can't miss out on that opportunity cost. I'm chickening out. So once I make this deposit, this 5,000 LUSD, it's bonded. I have two options. I can either chicken in and I can take the issued BLUSD that's been accrued, or I can chicken out, get my deposit back, and leave and say thanks. I will sacrifice my yield and the opportunity costs that I was waiting in this situation, and of course the gas fees, but that's something to factor in. That's why I say to do different bonds. That way if you do chicken in and then the price skyrockets, well then you also have a couple more bonds that are waiting to make that decision. So this simulation is kind of cool. But going back to DeFi Saver, as you guys can see here, I have my bond and it's starting to accrue BLUSD. My original deposit was 5,000 LUSD. After like 1 minute, 2 minutes, let's see how much I've earned. I've already earned 2.43 LUSD, which is 2.02 BLUSD. This would be really dumb for me to claim and sell, whatever. Because why would I sacrifice 5,000 LUSD for 2.43 LUSD worth? So at this point, I would either leave the bond, wait for it to accrue, hope BLUSD goes up in price so the time at which I can break even or make money is quicker, or I can just simply just be like, bro, I'm chickening out, this is not enough, I don't like it, whatever, I'm leaving. And I can chicken out and get my funds back. So now let's say this bond does become profitable. And I'm like, okay, I deposited 5,000 LUSD and this bond is worth $6,000 or 6,000 LUSD. So I'm like, you know what? I'm going to claim it. I'm going to profit the 1,000 bucks. Great. So once I go ahead and chicken in, there is a 3% fee. This actually gets distributed and is what is feeding this LUSD yield. Once I have my BLUSD, I have a couple of options. The first, I can hold it. I can wait till it goes up and sell it at a higher price or lower price if you're me. Second, you can take your BLUSD and swap it immediately as soon as you get it for some of the LUSD 3 curve tokens. This 3 curve token is a yield bearing asset, so even if you hold it, is still earning some of the swap fees on curve, but that's another option. Third, you can simply deposit into this pool so you can get the 21% LUSD APY and still have exposure to these 2 yield bearing assets. Remember, BLUSD is earning at a clip of 50.14%, and your LP is earning 22%, and this LUSD 3 curve token, this thing is also earning a yield because as people swap against it, it's getting a yield. As you see here, it's only 0.46%, but still, hey, it's something. Now, if you do chicken out or give up, it's okay. It's no worries. You still get a cool NFT. So you get a bonding NFT for depositing and being in the pool. And then you also get a chicken in NFT if you decide to chicken in, or you get a chicken out if you decide to be like, bruh, this is too much. I can't do it. So it's cool. You get a fun NFT, and maybe they'll do an airdrop in the future for them. And also these NFTs have different rarities. I want to show you guys this chart so you guys can see the difference between the BLUSD and the LUSD strategies. So as you can see here, as it used to be, if I was in Liquity, I can either deposit into the stability pool and earn a yield, or I can just sit on my LUSD. However, with the BLUSD strategy and the new chicken bonds, there is now some more optionality and a way to get yield. Me holding this BLUSD token or even depositing into the LP pool will give me more optionality because now I earn fees from the stability pool, I earn fees from the curve LUSD 3 curve pool, as well as from the protocol owned liquidity, which goes distributed to stability pool as well as curve. So it's like a win-win situation. And as you guys can see here, this is the layout. All right, that's enough about Liquity. That's enough about chicken bonds. Let's talk about this flywheel. So this is how the flywheel would work. The cheapest and most cost-effective way to get LUSD, especially if it's trading over $1, is to lend out some Ethereum and borrow LUSD against it. You're basically getting a free 4%. So this causes more ETH to be pulled off the market. Remember, the only way to make LUSD is by depositing Ethereum and borrowing against it. So as people get this LUSD, they want to play the chicken bond game with the LUSD. This further drives demand for LUSD, which increases the price of the LUSD and incentivizes more users to borrow against their ETH, which creates buy pressure on ETH. Now more people want to chicken in or bond their LUSD, and this also juices the APY. The reason why they want to chicken in is because the yields are boosting, it's going nuts and ham, and people want to join the party. So this juices the APY of the curve pool, which attracts more users, so then they play the chicken bond game, and you guys get that flywheel. Now, Liquity also benefits from this, because remember, the users will eventually have to repay their loans, or there will be liquidations, and the stakers, they get a portion of the repayment fee, and the LUSD stablecoin is getting deeper liquidity from the protocol owned liquidity from these different bonds. Remember, a portion of this goes to the protocol owned liquidity. Now, with ETH being locked up, more people chasing LUSD yields, driving even more demand for more ETH to lock up, and puts more buy pressure on ETH, more buy pressure on LUSD, and you're getting deeper liquidity in the LUSD pools. This constantly goes again and again to feed the beast. Now, putting the cherry on top, ETH is deflationary, so more network activity of playing the chicken bond game burns even more ETH. Anyways, guys, enough of the degen speculation. Thanks for tuning in, guys. Tell me what you guys think of chicken bonds. Have you guys tried them out? What's your guys' experience with them? And if you guys enjoyed this video, smash up the like and subscribe to the channel if you guys like content like this. If you guys want to join the Discord, there's a link in the description below. I'm a lot more active in Discord than I am on YouTube and other social media platforms. You guys can see what I'm doing in the markets. There's some exclusive videos in there, and you guys can chat with a bunch of other DeFi degens just like you. Proverbs chapter 12, verses 15. The way of a fool seems right to them, but the wise listen to advice. Be wise, be good. I'll see you guys in the next one.